Hey everyone. Amazon's been experiencing a resurgence in growth, and I was really excited to take a deeper dive into the company's conference call from this most recent update to really understand what's going on with Amazon stock. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so the CEO saying that revenue jumped by 13% year over year to 143.3 billion in revenue for just one quarter. Operating income, more impressively, increased by 221% to 15.3 billion, and trailing 12-month free cash flow came in at 48.8 billion. These are truly remarkable numbers, and you really have to take a look at them a couple of times to let them sink in. The company generated 15.3 billion in operating income, which was up 221% year over year. That's a massive jump in profitability on just 13% growth in revenue. Now, we're going to get more insights as to how Amazon is driving this kind of profit expansion, because it's not sustainable to grow your profit at this rate for a very long time. But these come on the back of unique circumstances, unprecedented circumstances during the pandemic, in which the company overinvested in its logistics and fulfillment capacity. And now it's growing into those investments, and it's streamlining those, and it's finding ways to use those investments better, and it's leading to these remarkable results. So the CEO saying that they're focused on driving better experiences for their customers while also delivering efficiency improvements. Starting with the stores business, they're focused on adding even more selection by adding more brands. And it's a positive, flowing, virtuous cycle that just feeds on itself here. Amazon adds more selection, which then attracts more buyers to the platform. And more buyers on the platform attracts more businesses to list more items on the platform, which then attracts more buyers, and it just feeds on itself. And Amazon has grown into a giant that generated 143 billion in revenue. That work, the difficulty in this is in the initial stages of growth and building this up. And now it's starting to reap the benefits of decades of investments in the core capabilities. And now it's really snowballing on itself. So one of the ways Amazon is focusing on getting more items on the platform is making it easier for third-party sellers to add products to the store. So they launched a new generative AI tool that enables sellers to simply provide a URL to their own website, and we automatically create high quality product detail pages on Amazon. And that's a big time saver, and that will get some businesses to go on Amazon's platform that previously may not have wanted to, right? Most businesses have their own websites already, but not every business is on Amazon's platform. One of the reasons they don't go on Amazon's platform is maybe they're a smaller business and they don't expect to generate very many sales on Amazon's website. And so they feel the time that they need to spend to get themselves onto the platform, to onboard onto the Amazon platform, might not be worthwhile. It just might not be worthwhile given all the time and the expense associated with that. But if Amazon could remove one friction point, which is the time to update all of your products onto the Amazon platform, if all you have to do is copy paste your URL and they'll generate your product pages for you, then that removes one roadblock, and it makes it more likely that some businesses that were previously hesitant to list on Amazon will now list on Amazon. So this could be an incremental boost for Amazon going forward, and you've already seen benefits from tools such as this. They've added a few other tools using artificial intelligence that have helped third-party businesses, and this is just another step in that direction. So interestingly, Amazon gave us some insights into customer behavior. And I've been really focused on this in 2024 because the economy is in this unique situation where we don't know if we're going to be going into a recession or if the economy is going to reaccelerate and grow. Because of the Federal Reserve and they increased interest rates by nearly 500 basis points in the last couple of years, most economists, including myself, thought the economy would slow down here in 2024 considerably, although we haven't seen that yet. We've seen some pockets of consumer spending falling. We've seen some pockets of headwind, but for the most part, the economy has remained strong and resilient in 2024. So, Amazon telling us that their customers are shopping, but they remain cautious, trading down on price when they can and seeking out deals. So, we're starting to see evidence of that slowdown. And Amazon isn't the only one that demonstrated this kind of cautious consumer behavior. We saw this with Starbucks, we saw this with McDonald's, we saw this with Apple, and many other companies that reported this latest quarter. The consumer wasn't spending as aggressively as they had been in previous quarters. In previous quarters, all I kept hearing from companies was, we've raised prices, but customers keep shopping. In fact, I heard from companies like McDonald's, Pepsi, Coca-Cola, and others that have been raising prices. They were telling us that customers are spending despite these price increases at historic levels. So, of course, companies like McDonald's, Coca-Cola, and Pepsi have decades of data on when they raise prices, how consumers react. And what they had been telling us is that they're not seeing the usual pullback in spending after all the price increases they implemented. And that was due to the robust balance sheet consumers had after all of the stimulus checks and all of the stimulus money that went into the system following the pandemic. So now, finally, we're starting to see consumer budgets be constrained, and we're starting to see companies, and I think Amazon must be, I don't know, I've lost count already on how many companies I've followed in the most recent quarter that are reporting that consumers are becoming a little more cautious, a little more cautious. No alarm signs yet, but signs of a slowdown to be sure. So in the past first quarter, Amazon delivered to Prime members at their fastest speeds ever. And that's important because they highlight that as they get items to customers faster, customers choose Amazon to fulfill their shopping needs more frequently. So the faster the speed you promise, the more likely you are to get your customer to purchase from your store, right? If you are considering buying an item from Amazon or Target or Walmart, and they all probably have a similar price, but Amazon says that they can get you the item tomorrow, while Target and Walmart promise you, delivery in the next 3 to 5 days, then you're probably going to choose Amazon, all else being equal. So that's a competitive advantage for Amazon that some other retailers, online retailers, have had a hard time matching, and that's what's giving Amazon a strong advantage going forward. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.